Hey guys, what's up? George here from the Millionaire Project. So I want to try out something a little bit different today. A lot of you have been asking me to upload more and post more videos and start using YouTube a bit more, so I may just start doing that depending on how this goes here. So taking a different approach, usually every weekend I take chart requests from you guys and I will send you a written analysis along with a picture of a chart that looks exactly like this. So today I'm going to kind of go over that in real time and do a real time charting session for you guys and see how that goes. So let's just get straight into it and start off with our first chart request, which was Roblox. So as we know, Roblox is a fairly new company and they have a very innovative platform for their users. As of late, they have started integrating their whole metaverse technology, which a lot of people are seeing to be very promising for the future. Something that we need to see from Roblox, having said that this is a new company and that this technology is somewhat risky because it has not yet been integrated into people's lives or platforms or whatever they use, is that we need to see the stock have continuous user growth and continuous new platform users. Looking at the technical analysis standpoint of the stock, Roblox had hit a double top here back in August and early September, which caused this drop here. For the past few days, Roblox has been coming down, as has the rest of the market. They recently broke below their 200-day moving average and were heading towards their critical support of 72, at which we bounced at on Friday. The main focus this week is watching Roblox to break above 76 to go towards this $78 resistance, which was once a support that we bounced from and then came down, at which point we can enter the stock to ride towards this $84 resistance, which would be our price target. We could use 78 as our new support line and 76 as a higher risk support. Above this $84 break, Roblox should test this double top again to break 92 and head towards new all-time highs. Something to note is that we are looking at the daily chart here. Why are we looking at the daily chart? When you're looking at a stock, you typically want to figure out what you want to do with the stock. Are you wanting to swing trade it or are you wanting to day trade it? If you want to swing trade a stock, you don't want to focus on smaller micro time frames such as the 1 minute or 5 minute candles. If you're looking to swing trade it, you want to focus on larger candle time frames, such as daily or even hourly candlesticks. When you're scalping or day trading, then you would want to focus on the smaller micro time frames, such as the minute or 5 minute candles. So, having said that, when you look at a longer time frame, it represents a more accurate depiction of what the stock is doing. All of your indicators, the volume, the RSI, the MACD, these are all more accurate indicators because you have more time. So when we look at the volume here, we can see that Roblox has really not been in any sort of trend. They've kind of been all over the place. They haven't been in a bullish trend and they have not been in a bearish trend. If we look at the shorter time frame and we go, say, to the 5 minute candles, we can see that Roblox has definitely been in a bearish trend over the past 3 days. So moving on to the next chart, we have Disney. So let's take a look at Disney. Let's go to the daily candles again. As we said, this is what you want to start when you're looking at a chart, as this is the most significant. So looking at Disney, we know that from their earnings, their user growth and their subscribers have increased dramatically. So what this means is that people are going to have high expectations for them in the future once they have such great numbers. This means that they constantly need to have new and exclusive content being put out regularly on their Disney Plus platform. Looking at the technical analysis standpoint of Disney, we see that the stock came down to their 200-day moving average and managed to bounce up. This 172 support was very critical to stop them from falling back down to 150, which would most likely cause them to have a bearish trend. The stock created a double bottom right here, as you see, once it broke below the 200-day moving average twice. And now our main focus for the stock is to break above this 178.50 resistance here, at which you could enter the trade and ride it up to 186 as your first price target using this 178 or just right below it. So you could say 178 flat as your support and 172 as your higher risk support. Looking at a shorter time frame, we can see, like we said, Disney had a bounce coming from this downtrend here, broke above this resistance, and has now been trending upwards, which we need them to continue to do in order for them to be in a bullish trend. Next, we have NIO. Let's take a look at NIO. So if you guys know, I really love NIO. I've been talking about NIO ever since they were at $7 a share. I really do like the company. So NIO is a Chinese EV company, electric vehicles. And this year, they are definitely looking to make some moves in the future. So looking at their earnings, we see that they have had some increased delivery numbers and their revenue has also gone up, which is a big change for them. Looking at the technical analysis aspect of them, we see that there is a falling wedge pattern here, which is typically a bullish pattern. So what we want to see now is we want to see the stock break from this price point here, which is right around $36.75. So we need a $37 break for the stock to go back up towards this $39 resistance to continue an uptrend. Looking at the past couple of days, NIO has been trading right around this critical $35 support, as we know that China stocks have been getting slammed ever since the Evergrande situation last week. So NIO is definitely at a critical point. I would not enter the stock unless we get confirmation above this wedge here. And personally, I would not like that because it is a little bit too high risk. So I would personally wait for this $39 resistance break to enter the stock and put my stop loss just below this around 38 and ride it out to that $42 price target. Next, we have Lucid, another EV company. Okay, so Lucid, we could see, has been all over the place. There has been no trend with the stock. As of late, they had come down and they had just started rebounding, seeing some bullish volume here, and they've been trading around this range here, around the 27.50 and around the 23.50 mark. So you have a trading range here. You could enter the stock anywhere between these 2 points and put your stop loss just below this breakout here, so around $23.80 to $24, depending on your risk tolerance, and use that to guide you up towards this $27 resistance, which could be your first price target that I would take some profits at, as it has been a point that the stock has struggled at. You could see that it's gotten rejected at this price point multiple times, and when it has broken out, it has instantly fallen right back down and not been able to hold that. Again, another new company here, has not proven much. They just had their merger happen recently, so a lot of people were anticipating that, and now they are waiting to see what the future holds for these guys. EV is just still a very high risk sector simply because of how we have not integrated it into our lives so much yet. Yes, there are some very successful EV makers. Tesla, Ford is starting to get into it, NIO even, but they have not taken over the industry yet. So with all of these new laws and everything coming into play with the new administration, we may start to see EV companies start to pick up steam a little bit here in the near future.